Hi guys, a very warm welcome to my channel. Today we are going to take a look at the technical analysis of AMC. AMC is currently trading at 1675. The time is 3:30ish New York time, and AMC after the initial rise today is sort of consolidating. It's been a little choppy. So if let's quickly look at what are our price targets and how the technical analysis is going to work for this particular chart as it stands right now. So if you see, these white lines are essentially I have drawn them out because they are gap fills, and the first gap fill was here in this range, and AMC already broke that, sort of is consolidating below that particular part, but that shouldn't cause too much of a concern. The next gap that we are looking at here is in the range of 2025 and 1998. That's our next range. So if AMC breaks out of this, this is the zone that we should be looking at next for the next move up. And then finally, the third gap fill that we are looking at is here in the range of 2298 and 2256. So 2250 to 23. So that's the third range. So essentially, in an ideal world, the way if you are a bull on this stock, the way you would like it to move is to break it through here, maybe do a little bit of maybe chop around a bit, have a solid break through this level, find support on this particular level before making the next push up, and then doing another consolidation on that level. So ideally, this would be the perfect scenario for AMC price action over the course of the next few days and weeks. If this particular bull trend continues, as you can see, we are in a current bull trend, although it is extremely steep. We are still in a bull trend, so we can sort of chart that out by sort of drawing this trend line. So it is quite a steep bull trend if you think about it, but it is a bull trend nonetheless. We did break the top of this neckline here, the resistance that has been created for the past few days. There we go. So we are in sort of an ascending triangle pattern here. So we did break it, but then we promptly broke down, and now we are holding this particular line here. So if this is the price action that we get to see, then that will be very good. Now, full disclosure here, guys, I am a bull on AMC. I hold AMC shares myself. I have no problem disclosing the fact that I have around 100 odd AMC shares at a cost basis of 22-ish. So I am still looking to average down. So that being said, let's look at the overall picture. So we are currently, let me just get rid of these things quickly. All right, so I'll get rid of this trend line as well. Now, as you can see, I'm in a very micro chart here. So let me zoom out a bit. Let me go to a 15-minute chart and see what's up there. Now, it's interesting here because I've been doing a few comparisons of sort of price action in AMC over the course of the last few months, and I have sort of come to appreciate the fact that AMC during these high volatile phases, like for example from here from 8th December to today, which is almost, you know, till the dip, at least, let's say it's a 60% decrease in just over 50 days, right? So that's quite a extreme volatile period for the stock. So whenever AMC stock has these sort of volatile periods, curves are probably your best friend to get a reference on how price action will follow. So these are sort of what I have been looking at, the trend channels. Now, I know what a lot of people will say, that AMC technical is all about wedges and descending triangles and pennants and all of that. It's a wedge within a wedge within a wedge, and we are going to take a look at it. But I think it's also worth noting that we should take a look at the curves as well. So as you can see here, AMC has been in this sort of a trend channel, and it has respected pretty well. It started off in 8th of December after the first initial dip from the regular trading range of 41 to 43-ish. The first dip came, and then it got a little bit of a bounce back. We thought that this would be the end of it, but then it just continued to, keep on going downwards. And since then, AMC has entered this trend channel. As you can see, it is hitting all of these, touch points. So it is there's a touch here. Now let me turn my magnet off. Sorry. There's a touch here. Oh, what's going on? Apologies for that. There is a touch here. Then there is a touch here. Then you can see that it tried to break out here, but it was a little bit of a bull trap, although it's too small to actually call it a trap. But it tried to break out here, but then it held this line very well. As you can see here, it had another touch point right about here, and then finally it broke out yesterday, and then a couple of days ago, and then today it just gave a complete good breakout. While this touch point has been associated with the top resistance line, these touch points, there is also the bottom support line. As you can see, there is enough touch points here to give you a confidence that yes, this channel is an established one for AMC. As you can see, there are multiple confirmations. And similarly, with the upper resistance line and the bottom support line, we also have a median line, which also, by the way, has respected very well. Like there is, a bounce here, then you tried to break off, then you found support twice here, tried to break out, could not find support, broke down, went down, and as you can see, it's been respecting this channel very well. So this has given a breakout now, as I drew with this steep bull trend. Of course, I don't expect this bull trend to hold. In an ideal world, as I showed you, I would like the price to go up, find support, go up, find support, go up, find supports, and then try and break these levels here, which is the 29s. That would probably signify the biggest sort of indication that yes, the bear market has completely been reversed on AMC, and we are now on a proper, we can move on to the MOAS, or so as how people say it. But anyways, and it's interesting to note that every time price has been this volatile for AMC in these kind of trend channels, there has always been a breakout. And you can see this as a contrary just on the other side of the spectrum in May last year, when it squeezed. After the squeeze was done, let me just take you back to that zone. So here you can see the same sort of price action played out in that similar fashion of a curved trend channel with multiple touch points, and then finally a breakout. Now, does that mean that we can see downsides after this? Yes, you can say that we are not completely out of the woods when it comes to AMC price action. This price can certainly go down as well, and we will take a look at why and what are the major supports that it needs to hold in order to sort of invalidate those concerns. But so far so good. Yes, it has shown a proper breakout just like here. And also you have to remember that the context is different. Here the price was coming on an uptrend after the squeeze was ending. Here we are pretty much searching the bottom, right? And we believe that this might just be the bottom before the price action can slowly try and seek itself and get some sort of a revision and give all AMC stockholders a breather. So let's look at those wedges that we were talking about. But before we get into that, I think it's important to also look at a couple of key aspects as to where we are currently with the price action. So if you zoom out a bit, I'm going to go into a little bit of a macro chart here. So I'm in log, as you can see, and I'm going to pull a fib of the first squeeze that happened in January. As you can see, if I just do a normal retracement from the bottom of this to the top, which was somewhere here, as you can see, the price retraced back all the way back to the 618, the 0.618 before started moving out, right? So this is where we sort of find ourselves as well in the second squeeze. So now let's draw the same fib out, but this time we're going to do it for our second squeeze. So from, let's say, if we consider it from here till the top of this, and just a second, it's being a bit cluttered, but I believe it's from here. All right, so we broke down from the 0.618 and found support in the 0.786, which is 13.15. I think our low was 13.41, as you can see on the top there, 13.41. So pretty close, and we are sort of respecting those supports very well. I think I drew it from a different direction. Let me see if I made a mistake there. Just let me make sure that we are on the log here. Yep, fibs are on log. What about this one? Yeah, fibs are on log here as well. So as you can see with our fibs here, they somewhat coincide with these gap fills, and these gap fills will give you additional targets in the middle of these fib lines. So we got rejected from our 0.618, right? 0.618 here today. Yeah, I mean, we almost reached it, but it's good thing that we found support in our 0.786, and now we can freely move above, and these are our fib levels as we move up. Okay, so now let's take a look at the wedges. So let me just get rid of these. Oh, sorry, fib events. So the way wedges are working in AMC is that it almost looks like AMC is in a wedge inception kind of a place, because there are multiple wedges that are playing out as we go through these, and just got rid of those just to make it easier for me. I think I'll try and get rid of a few of these as well. So you can mark it out in your own charts as well, these levels, just to keep track of what are the next levels to look at. So these are our ranges. So our first range that we're looking at is 17 to 17.64. Then we're looking at 19 or somewhere around 20 to 20.5, and then 22.5 to 23. So you can mark these out and sort of follow along as well as the price action moves over the course of the next few weeks, and see if we respect and fill those gaps. 90% of the time, the gaps are left there by the algos that are trading these stocks as an indicator as to where they want to sort of consolidate and trade a bit more before going on to the next one. So that's a good indication as to where the price action can go next. So let's look at the wedges now. So there are, as I said, multiple wedges in AMC. So before I do that, let me go to the daily chart and switch to just normal here, and try and turn off this. Okay, so those gap fills that I was talking about, that will become very clear on a daily chart without the extended hours. See, you can see these gap fills here. So there is others as well beyond 23 as well. There is 38, and then you have one at 44, you have one at 49, but those have already been covered in earlier correction waves, so they are less likely to sort of hold true as crucial points for the price to move. But anyways, let's look at our wedge now. So the first wedge that we can draw is a wedge from the top of our squeeze here, kissing the top lines there, and we can sort of extend this till here. So that is the first, and then from the bottom of this particular candle, which is the 2nd of June, right, the big candle which had a 95% move, the bottom of that candle touching all the points along the way, and you have this wedge right here. See, so you can see, you have multiple touch points on the top and on the bottom as well. So you can even sort of bring this down to make sure that it touches this particular bit as well. But anyways, you can see that this is sort of a downward falling wedge. That's the macro wedge here, and now you have other micro wedges that you can draw as well. So from, let's say, from this top to here is another wedge which takes into account these sort of lines. So that would be another wedge for you, which is the wedge that we just broke out of, right? So similarly, we can probably make from this here, taking it down somewhat this way. So this would be an example of another downward falling wedge where, as you can see here, there are multiple touch points up. It tried to break out, had a bull trap, got rejected by the macro wedge, and then just kept falling back down again. So that would be our third sort of wedge there. So as you can see here, the good news is that we did break out of this first wedge, this sort of micro wedge that had sort of formed. But now we also need to break these resistances as and when they come to us. So here would be a major resistance. Once the price moves up here, we need to make sure that it breaks that, consolidates, and then breaks. So the way ideally we would like this to happen is if the price, let's say, consolidated here, based on based on the levels and the gap fills and everything, comes down, consolidates again, gives a breakout of the second wedge, gets another retest, and then a confirmation of that sort of resistance, which was earlier resistance, now turning into a support, and then finally breaking the main macro wedge. Again, important, it has to retrace and find support for the wedge to be valid before pushing up towards the MOAS. So this kind of a retracement move can happen. Now I'm not saying here that this retracement would only be till here. This is just an example of the way price can move. It can certainly come back down and test the bottom support of the falling wedge. Now if this bottom support breaks, for instance, and we go down, then we would have invalidated this particular wedge, and we will have to draw it again. But let's hope that we have seen the bottom and that's not the case. So it can come down again, move around, come down again, and do this as well. So there is no reason why the price can't do this for a few days or for a month before we see breakout. So all of these are possible, but it is important for us to keep watch on these kind of patterns that have formed on a very macro level. And these are not patterns that have formed just over a course of a couple of days or a couple of weeks. These are macro patterns. They are almost 8-9 months old now. So when it comes to wedges, those tend to play out really well in those macro time frames. Plus, another good thing to see today is that although it is so far selling volume, but it's good to see that the volume has come back, and it has crossed 117 million, so that's good. And there is still close to less than half an hour left, so that's good news. Hopefully we see another jump up during the after hours today as well. So most of the after hour jump can be attributed to the fact that AMC released its quarterly earnings, like gave a snapshot of its quarterly earnings, and that was very good. And I'm going to cover those in a different video as well, but the earnings look pretty good, and now the fundamentals of the stock are strong enough that we should see a proper reversal of the price. It's no longer valid for AMC to stay in this zone, or even if it does, it will soon see an uptrend. Now, to what level the squeeze is going to happen, or whether the squeeze is going to happen once we break these levels, is anybody's guess. Anybody who's telling you that the squeeze can be tomorrow or the squeeze can be after we break these certain levels is probably very unsure about how TA works, because price can very easily do this, where it breaks out of, beats all of their expectations, and then it just falls back down and consolidates. There is no stopping price action from doing that. And then there are the external factors to look into as well, like SPY has finally got a breather, but if the overall market starts going down again, then you should not expect AMC to ride up. That logic does not hold. So let's quickly take a look at a few of the indicators, and before we end this video. So the major thing to keep an eye on is the on balance volume here. As you can see, the on balance volume is very much accumulative. Like this is purely accumulation kind of a deal going on here. Now, what do we mean by accumulation? What we mean is that the price has gone down while the on balance volume has literally stayed same or even higher. Like if you look at the on balance volume today and draw a straight line, right, you are almost at the same volume level that you were on 10th September when the price was 53 bucks. So we are like almost, what are we, from 53 to so we are 60% down in price, but the on balance volume is the same. Now, what is this on balance volume? Essentially what it does is that it takes the, if there is a green day, it adds the number. Like for example, there is green, so it will add, and then there are 2-3 reds, it'll subtract the reds, and it'll keep doing that to maintain a on balance volume based on the price. So if you see the on balance volume staying up while the price is going down, that means there is accumulation happening. The people, organizations, algorithms are buying and maintaining the volumes consistently high. So this is one of the major factors that should convince you that people are buying this stock. There is accumulation happening, and there will be a reversal, just like any other stock. Like even if the squeeze doesn't happen, believe me, there will be a reversal in price, and we will go back up to these 40s and 50s, maybe even 70s. before we come back down again. For instance, if the squeeze doesn't happen, but of course with AMC, the whole idea is for that of a squeeze, right? So if we manage to break these levels and then the squeeze happens, who knows how far this can take you. So steady estimate of 100%, 200% increase will get you to $96. Excuse me. And that's just a conservative estimate. Of course, there are various different predictions out there. I'm also gonna, come out with my sort of knowledge and understanding of where I see the price going when the stock squeezes, and what would be my exit plan. As I said, I hold 100 AMC share at a cost basis of around 22. So I also have an exit plan that I have planned out for myself, which I am going to share with you in the subsequent videos. So that's indicator number one. If you've stick around so far, I really appreciate you. This is my first video and I hope to continue doing this. So thank you so much for your support. Let's look at a few exponential averages just to make sure that we are holding a few key ones. So let's change this exponential to 20. Let's go with 100 here, and then we will do a 200. So let's see where all of these averages are. So let's check out our weekly first on a macro scale. So this becomes very apparent. The falling wedges become very apparent in a macro scale as well. As you can see, we just broke out of the first one. We need to break out of the second and then the third before we can even start discussing about MOAS and all those other things. So so far everything is looking compressive. Like from these EMAs, you can see that they are all converging down to a point. Now that's a good thing. That's compressive price action usually leads to a spring which then explodes out. So in the daily time frame, I guess that crossover already happened. Of course the 20 EMA had crossed over a long time back, but now the 100 EMA is sort of coming close to the 200 EMA, and this will probably cross back down. So if the price in the next coming week moves up like this, what you can expect to see in the EMA is a movement similar to, so I'm talking about the 100 EMA here. So the 100 EMA will definitely go down before it sort of comes back out, right? So it will be something like this. Again, its depth will depend on how quickly it takes for the price to jump up and how much does it consolidate. If it really consolidates and sort of falls back down, then again the EMA is going to sag. But let's say it's fairly quickly, then your 50-day EMA is going to look something like that, and your 200-day EMA 200-day EMA should look something similar to this, and then the 50-day sort of crossing over as price is rising. Sorry, it's difficult to make it using these curves, but you get the point. It essentially can just kiss the top and move up, or it can just come back down, dip, and then move up. So these are lagging indicators, but it is important to note that the 100-day EMA is going to move below the 200-day EMA. So that is definitely a bearish sign. So there is no way for us that we can think that we are completely out of the woods yet. Since we are in these falling wedges, there is a very decent chance that we sort of move back down again, right? So the price moves back down and tests these zones, right? So it is completely possible that happens. And if you want to know where those levels are, you can very easily pull a fib to see. In fact, you don't even need to pull a fib. You can see from here that this was the gap, right, where we wanted to hold support. We broke that gap. So this would be our next sort of support line, 1192-ish, right? where the first sort of the second squeeze started. So somewhere around here, that's one point of support, and then the second point of support. These would be sort of the point of support. Like if price actually sort of zigzags and comes down here, which I'm not saying it will happen, but it can happen, and if that happens, then this zone has to be respected. If we break below this zone, I don't know what will happen. Anybody's guess at that point of time. I guess a lot of people will be bag holders. That's my take anyways, but let's hope that's not the case. So let's see if we have any divergences. We quickly look at some. Nothing too good as such. As you can see, the RSI has been beaten down. It's in 33, so we are way oversold territory. We need to find some sort of a reversal. And oops, sorry, I think I have way too many indicators on. So if I remove my, I switched on my Bollinger Bands and my relative strength indicator, and you can see the RSI has been beaten down to a pulp. So it is looking very reversally. So we should see upside in the near future. So thank you very much, guys, again once more for sticking till the end. I am going to be releasing more videos on different stocks as well. So if you like what you saw, thank you so much for your support, and hope to see you again in the next video. Cheers. Bye bye.